traders, and welcome to a new day trading strategy video of mine. Today's video is going to be on stochastic strategy. This was the Patreon suggested video. As you can see, about 70% of the votes were stochastics, so back to technical indicators we go. So just to start off with how stochastics work and why we want to use them. Stochastics work with this calculation here, except that the trading view default is going to be 14 and not 5. But you can adjust your settings accordingly. Basically, what stochastics do is take the close prices and the low and the highs of these close prices to calculate the fast and the slow stochastic. If you are interested in more theory and in more research about how this calculation was made, you can look onto Investopedia, which is where I pulled this information from. You can think of stochastics as an in-between RSI and EMAs. So it gets the benefit of both momentum, such as EMA crossovers, and that's exactly what this uses, a crossover, but also uses oversold, overbought, just like RSI does. So it's a good hybrid between RSI and EMAs. So the basic strategy, and I will say that stochastic strategy is by itself incredibly simple, which can be good and bad. Good in the sense that you can easily pair it with other indicators. Bad in the sense that use just by itself alone is going to cause some issues. So that's why we're also going to be talking about confluence with other kinds of indicators as well. But what you want to do is wait for the stochastic to go below 20 on your time frame and also on the coin. You want the fast stochastic to then cross above the slow stochastic and above 20 as well. This is where we want to market buy or try to trail the order book with a limit buy to try to get less fees, if that is possible. Selling is just the opposite. We want stochastic to be above 80 and the fast stochastic to cross below the slow and below the 80 line as well. So it has to cross two lines. First, it has to cross the slow stochastic, the fast one does, and then the second thing it has to do is cross below 80. If that doesn't make sense with the words, this is what it would look like visually, with the fast stochastic on TradingView being this blue, and the slow being this orange, as you can see here. So it would indicate a buy right here. And it would have indicated a sell here, and it would have indicated a sell here as well as here. So back to adding other layers of confluence with this. One thing that we can look at is Candlestick Confluence. So when we buy, we want to look for signs of selling exhaustion. So this could be low tails, where you have a small body and then a large tail to the downside. But we also want to see high demand picking up with bullish engulfing candles or morning star patterns where you get a bearish move, a doji, and then a bullish move. When selling, we want to look for signs of buying exhaustion, such as high tails or weak bullish momentum. Weak bullish momentum would just be small candlesticks, potentially high volume small candlesticks that are struggling to make higher highs. And we want to look for supply to pick up with bearish engulfing candles or an evening star formation, which is just the inverse of a morning star. Volume confluence. All I put here was just look for signs of selling exhaustion, such as volume spikes, and buying exhaustion. When you want to sell, we want to look for signs of buying exhaustion, such as buying volume spikes. You could also look a little bit deeper into volume rather than just this simple way of using it in conjunction with the stochastic, by looking at volume patterns throughout a trend. So if you wanted to see is volume increasing in the direction of the trend or is volume increasing in the direction of the retracement of a trend, you can use those kinds of dynamics if you want as well. All right, so let's get into some actual examples of what this would look like. So what we have here is an example where we had the stochastic go low here and then we had a crossover, so we could have bought in here, but how about this signal here? Looking at candlesticks and looking at volume and the stochastic indicator, would this be a good buy? I'm going to give you guys 3 seconds for this one. So yep, this would have actually been a pretty picture perfect buy. A few things here. We have a volume spike here that looks to be about 4 times the moving average. We have a stochastic crossover that goes below 20 and then pops up right below the slow stochastic. And we have a morning star formation that I talked about earlier. And really not strong bearish momentum as of recent The market doesn't look like this. So weaker bearish momentum, as you can see here, volume spike and the morning star. And this turned quite bullish. One could have sold early here, or one could have sold here as well. If you want to avoid selling when the stochastic indicates, such as selling here, I mean, I guess you can. It would have indicated a sell right there. Potentially, you could combine candlesticks in the way that you would want to wait for a bearish candlestick to sell. So if you use that strategy, when you do get the cross under of the stochastic here, you could just wait until you get bearish confirmation, which would be up here. And same for, I think, this one as well. Well, actually, the stochastic did go overbought here above the 80, but we wouldn't have sold. We would have only have sold when it crosses below the 80, as it does here. Here as well, I think you'd probably want to sell once we see two high tails here, and we see a bit of a evening star candlestick formation here as well, and the stochastic is, as you can see, overbought here. All right, so on to our second example here of just what to look for when you are trading with stochastics. We see rapid bullish momentum on EOS Bitcoin on Binance, and we see an overbought stochastic, and then we see the fast go below the slow right here, indicating the sell. Also, we get the classic evening star formation here. Price moves down, and we see high demand picking up with high volume as well at the base of an uptrend, of a potential uptrend. And we see the fast stochastic cross above the 80 and below and above the slow stochastic as well. So what do? 3 seconds. I think this one was kind of given away, but this would have been a pretty good spot to buy. Two things that I will say would have been not the greatest to sell here. As you can see, price just goes higher. Although the stochastic does indicate you should probably get out of the market. One way maybe you could play this market, I know this is 2020, hindsight is get out of the market here and then potentially rebuy back in when we see this higher volume and this low tail here that looks quite bullish. And then we see bullish confirmation here that this type of pattern typically leads to a continuation. Selling, if you had not sold here and you were still in the market and looking for a stochastic cross under, you can see that the stochastic goes above 80 twice. Once here, we get a selling confirmation that would have been right there. And then we get a second one right here after a volume spike at the very top right here. So these two would have been probably much better selling areas due to the major volume spikes here. Really not much volume being transacted here when the stochastic was overbought, meaning that when there's not a lot of volume being transacted, typically the trend continues to move in its direction. So we see that does happen here. And a lot of volume does occur here, which means that the trend changes and turns into an uptrend from here to here. Then here we see a lot of volume, meaning that we get a downtrend. Okay, so now for BNB Bitcoin on the 1 hour, I didn't want to just show 5-minute examples using stochastics, volume, and candlesticks. I also want to talk about the 1 hour time frame as well, because this would have led to an interesting trade that one could have taken. So we get a crossover here with what looks to be a morning star formation with two low tails and minor volume spikes, about 1.3, 1.4 times moving average. And we get this stochastic crossover, so we would have bought in here. If we were holding a position from here, or if we were interested in buying here, would we want to get in the market here? Yes or no? So this would have actually been a pretty good spot to buy in. I know 2020 hindsight again. Here we get strong bullishness, we get low tails, and here we get low tails and really weak bearish momentum, as you can see here. And we get another crossover of the stochastic as price is just moving sideways, which would have led price to go upward, as you can see here, and price does go higher. And currently, as you can see, we might have been faked out here by the stochastic, right about here. But again, anyone who reads candlesticks and reads into volume, you can see that we don't really have a spike in volume here, and we don't have high tails, such as here. We have more low tails, so maybe one would have ignored this move and just held the trade. Okay, so final example here with just a shorter time frame with stochastics. So what would we want to do here? I'm going to give you guys 5 seconds for this one. Okay, so this would have actually been a pretty good spot to buy. The only issue, though, is that we do see high bearish momentum, which is not fantastic. We see strong bearish momentum here, and then we see a pickup of strong bearish momentum here. Only caveat here is that we are in a present downtrend. This is not a long period of consolidation like this and then a downtrend. This is an established downtrend where we have at least a 3-wave pattern. We go down, we go up, and then we go down. So this is a downtrend that might have already had many sellers who have already sold, meaning that that might indicate seller exhaustion, meaning that we might want to buy in with the stochastic indicator. And we see an example here where we have a volume spike, multiple volume spikes here. We have a stochastic crossover, and we have what looks to be, again, a morning star formation with a bearish candle, a doji, and then a bullish candle, and then price goes upward, as you can see here. Again, I think I've said this on every example, but we would have gotten a few stochastic fakeouts, one here for Ethereum, one here, and one here as well. Price does go down each time we get the indication of overbought. However, it doesn't really go down that much until we get to the third overbought here, cross under. Again, if you want to know how to when to ignore stochastic signals and when to follow them, we just want to look at volume and we'd want to look at candlesticks. So here, I actually probably would have sold. I probably wouldn't have sold here, but here I will say confidently that I would have. We have a major volume spike. We have a high tail. We have a stochastic cross under right here. So this would have been a hard spot to avoid just using 2020 hindsight, as you can see here. But then we just don't get much follow-up on this bearish move. And then price naturally goes higher as demand picks up and supply doesn't really do much here, as you can see. So final tips for using the stochastic indicator. Of course, the first tip I would give with any indicator analysis or technique is risk management. You always want to have a stop loss and you always want to have a take profit plan as well. One thing I will add is you also always want to manage your risk, meaning that you don't want to risk 100x leverage with your entire account on a stochastic trade, or even 50% of your account. You're going to want to potentially look across multiple markets to diversify your trading or diversify your investing to use the stochastic. And rule 2 that I think I really talked about a lot is just to be more flexible with stochastics. Just because stochastics give you an oversold and then you get a crossover of the fast above the slow, that does not always mean we want to buy. We always want to look into context of the trend. We want to look at the candlestick patterns within that trend, and we want to look at volume spikes to see if they show that the trend is still on, not many volume spikes, and consistent volume, or if we're seeing major volume where the trend might be ending soon and we should be listening to our stochastic. And 3, that goes right along with 2, we always want to use additional indicators and analyses as well. This could be RSI, this could be MFI, this could be Fibonacci's, volume, anything, but we just never really want to use a technical indicator just by itself because that can lead to some problems. All right, so this is going to be it for the stochastic video, and I'm going to attach my settings for the next picture here. Happy trading.